Hello everybody, hope you're doing well. So in this video we're going to discuss refining new POIs and explain basically what it is, why we do it, and show you some examples as well in live charts, both a textbook example and real life market example. And hopefully at the end of this video, the objective is obviously to educate you guys and hopefully come out at the end of this video learning something new. So it's nothing crazy, it's nothing that's going to I guess I don't know, it depends how you utilize it is the question. But it's nothing crazy. It's just a simple little tip to help refine your entries. You can refine your entries. You can refine POIs, which correlates under entries anyways, or you can refine imbalances, for example. So whatever you want to do, this is the simplest way to do it. Now, before we jump through that, I get asked on a daily basis, what time frames do you use, what pairs do you trade? So I'm going to quickly go over that. So the pairs I mainly trade, I'll show you guys now on the right side. So this is my watch list. Watch list, I don't trade all of these pairs. What you guys must remember as well, that I do run a group, a community group in which I send chart analysis. So I'll send out chart analysis from different instruments. So I don't really actively trade all of them. However, I will, for example, I'm looking at the dollar card, pound dollar, pound yen. I'll correlate the pairs in terms of, like, for example, dollar card's going up, pound dollars going down, whatever. So I can sort of use it in that advantage, but very rarely I use it that way. I just sort of look at it, just on share chart analysis. But the main pairs that I do trade is GU. GJ was one that I used to trade quite a lot, however it's not much so lately. It is mainly GU, and I would say EU has been making a rise on my positions lately. And US oil, so WTI, that's one that I do like to trade. Gold as well, however I haven't taken so many positions on gold lately. And yeah, that's pretty much it really. Like I said, I don't really want to trade too many pairs. NAS 100 I occasionally trade as well, but I don't like to trade too many pairs. I just have someone there basically just chart analysis. And yes, before you ask, it can get a little bit, like there's so much to analyze, but at the end of the day, I run the business side of things as well as being an actual trader as well. So that's what I signed up for, and I'm happy with that. So basically, coming back to the video, guys, quick, that's been done. That's said anyways. The pairs, time frames, weekly, daily, 4 hour, 50 minute, 1 minute. You can already see that up here anyway, guys. And basically, I just filter through them time frames. So I start off from the weekly and work my way down to the 1 minute. And what I'll do is I'll look for my entries in the 1 minute. So basically, I grade my setups from low probability to highest probability, and highest probability setups are obviously when all time frames are lining up. So in terms of, for example, the weekly's bullish, daily, H4, 50 minute, 1 minute, all bullish. Those are the highest, tend to be the highest probability setups. Assuming they all went to plan and I followed my plan. And then obviously you can sort of work out those probability setups compared to high probability one based off those. And to me, there is no right or wrong in trading. The markets are random. There is no right or wrong. It's based on probabilities. So yeah, I think if you can go into the markets with a neutral bias as well on a daily basis, that helps. Before you do your chart markdown, and you look at different opportunities. For example, if it goes this way and it goes that way, I'll look at this, I'll look at that. So it's good to be like that, I guess, have a neutral bias in trading. And in terms of my actual entry time frame, that's usually the 1 minute. However, I will stop at the 15 minutes sometimes, and just take the trade based off the 15 minute time frame. So yeah, that's basically what I do. So when it comes to refinement, I'll quickly go over a quick introduction to what it is. So let's say, for example, this zone here that I'm drawing here, if you can see, guys, let's say this one is our daily zone, and then we go down to the 4 hour time frame, and we then have a POI. Now you're probably thinking, why are you drawing these zones? It's based off, just for example, just imagine there was a candle there, for example, like something like that, and that was the candle, and that was basically what I was drawing the order block off. Okay, so if you don't know what the POIs are or anything like that, make sure you go and watch my order blocks video, supply and demand video. There'll be a video somewhere on the channel, and that will explain POIs and what we call POIs. This is like an add-on to that video explaining how we refine the POIs. So there we have daily. Take this off, usually annoys me. And then we have the H4, And then basically what we will do is we'll drop to, let's say, the 15-minute, and we now have a new zone which looks something like this. And I'm sure you probably got some questions, and by the end of the video I should be able to already answer some of those questions that you may have. So as you guys can see here, this is the daily, H4 and 50-minute. Now there's obviously, you know, different well, a significant size increase within the zones, and that's obviously usually the case. That's the key point here. So when you have such a big zone, you basically go to the next time frame and refine that zone. Now if you wanted to, you can go ahead and like drag the daily zone onto the new H4 candle, but for me, I keep it drawn up and I just, you know, go down to the next time frame and draw that up as well. I don't really refine as much, to be honest. The way I trade is based off, like, if I just draw up all my time frames a minute, so you guys, and then I'll explain something and it might click for some of you as well, which may help you guys out. But if I just quickly, I won't do the 1 minute, I won't do the 1 minute. So as you guys can see here, we've got weekly daily for H4 and 50-minute, right? Basically what I do is if I have a weekly zone, I will go to the daily, and then once I have the daily zone, if it chucks, etc., I go to H4, repeat the process on the 50-minute, and eventually the 1 minute, in which I will take my entry. Sometimes, like I said, I stop at the 15-minute, that's all I need. However, if I refine the weekly zone to the daily zone, I will drop to the H4 off that daily zone. So what I usually do is in my analysis is I'll have like a preset saved here. And basically it'll come up, for example, if I click on daily, it should come up and say daily, or what was on my old one anyway. And well, it'll be like a D. That way I know if whatever zone price taps into, I can flip to that next available time frame. So if it's like tapping into the open of the daily zone, so for example, you know, let's say price is coming down here, we've already gone and tapped into the weekly, so we can flip to the daily time frame, but we drop a little bit lower, tap into the daily. What we can do is drop to the 4-hour time frame. And if there's no reaction in the 4-hour time frame, then it is what it is. It's just, you know, not the right zone at the right time. Well, it was a low probability zone. But let's say, for example, you know, we tap into the weekly, we then go into the daily zone, we can then drop to the 4-hour. What I'm looking for in the 4 hours is literally just a 4-hour chuck. And then what I will do is if we get a chuck on the 4-hour, I'd look for a pullback into the newly created 4-hour zone, then drop to the 15-minute, look for a chuck on the 50-minute, etc. Right? So whatever time frame that we tap into. So if, say, for example, we come into daily, I'll drop to the 4-hour next. If we come drop into the 4-hour, drop to the 15-minute, and 50-minute to 1 minute. Okay. But I very rarely have my high time frame zones. So for example, my high time frame is the weekly daily 4-hour, and I guess you could say 50 minutes your intraday. 4-hour can even come under intraday sometimes as well, and you may even want to throw in like the 2-hour time frame here or the 1 hour. That's fine, some people do, but for me these 4 time frames are the key ones, and obviously the 1 minute was sort of 5 time frames in total. But in reality, yeah, that's pretty much it really. I'm just trying to think of if I missed anything, but you get the idea. So basically whatever zone it taps into, I'll drop to the next available time frame. And I very rarely, what I was trying to say is I'll drop to the, you know, I won't really refine past the H4. If there's a big candle as well, what I will do is I'll draw up another little thing for you guys. So if there's a candle like this, right, and this is your order block, and let's say you have a, you know, a wick like this, get that off a sec. So if you have something like this, then that looks like, you know, you can go ahead and mark that as your POI, right? But if you have something like this and it's like a big zone because of the wick, oops, what you can do is if the wick's bigger than the body, especially as well, not even if the wick's bigger than the body, but if it's just a big wick, you can just take the wick as a POI, because usually the point here is, guys, within the wicks is something on the lower time frame. And when I mean something, I just mean like there's a clear order block there within that wick on the lower time frame. So let's say, for example, this is the daily time frame. Usually what you will see if we go to the 4-hour time frame within this wick, you'll usually see, oh, well, you've seen it anyways, but a candle in there, and that will usually have a wick in there as well, like that, and that's a nice candle within that, and that's essentially, you know, what you will see. So what you can do is your head, like I said, you can go ahead and take that wick as your POI and ignore the body, and it will be, or most likely a lot of the time, it will be a POI within that wick. And it goes for all time frames, even the weekly time frame and the 1 minute time frame. Another example here, guys, as well. So let's say, for example, this is the daily time frame. So you have your POI. This is the 4-hour time frame. Okay, so daily POI, 4-hour POI. So these are supply zones because you're looking to sell from them, and if you're looking to buy, it's going to be demand zones, so supply and demand. So sell POI, so daily H4 POI, and merge together. Now, as you can see, there's a difference obviously in the size. And basically what we would look for now is if price comes and taps into the daily or the open, I'll switch to the 4-hour, but obviously I'll probably already be on a 4-hour time frame at this point, if you see this. So I'll be on a 4-hour time frame, and I'll be basically waiting for a 4-hour chuck. If we had a little bit higher and tap into the 4-hour, I'll drop to the 15 minutes. So hopefully at this point you can sort of understand what I'm trying to get at, and that's essentially the sort of that's basically it. Yeah. So I'm going to give you guys a quick live example. So here's an example of what I would take as a POI. So this here is a huge wick. I'll also show you, not show you, but I'll quickly explain something as well. So let's say, for example, you have clear, you know, equal lows here. Obviously this is a bit of an exaggeration, but you get the idea, right? Let's say, for example, there's clear equal lows here, right? And this wick swept this liquidity, because obviously this will be liquidity because you can class this as a support zone. Obviously there's going to be buyers on there, you know, the stop losses are going to be below here, especially with this third touch. So this here is obviously the candle that swept that liquidity and, you know, took the money, and then obviously we've seen a reaction to the upside. So rather than taking it as this huge candle here, this is still big, but I'll refine it in a minute. So what we would do is we'll just take it as the wick, all right? Or you can take it as the lowest point like that, and that'll be like a refinement to the wick. But just keep things simple, we can just keep it to the wick like that. All right, and then what we would do is drop to the 4-hour, and like I said, there will be something within there, and there you go. That's a great example of it. So within that huge high time frame wick, there was a lower time frame, you know, clear POI here. So that's pretty much what we're trying to get at here. Okay, so let's just remove that, and I'll quickly keep that a second. So if you just look at this, guys, you'll see here that there's obviously a difference. Now, something to note as well, which I'm going to mention here quickly, is when you drop to the next available time frame, there would usually be a POI around the open and the POI around the midpoint, or at least the extreme. And usually, if you look at this, right, this is, you may think this is, oh, it's just a coincidence, and it probably is. But if you look at this, when you look at this wick here, people take their entries off, you know, the midpoint of the wick. So if you had this drawn up as one whole, you know, big range, a big POI, sorry, so this is a clear demand zone for you, what you can do is you can just draw it up the fib tool, or there's other tools as well you can use. You can look to take your entry off there. So rather than refining the POI, you just take it off the midpoint. And that's usually just because we can't, you know, you don't want to refine a POI, so that's fine, okay? And a lot of people do this, especially on the lower time frame, so the 1 minute. So if you see the 1 minute time frame like a big POI, they'll take the entry off the midpoint if it's such a big zone, because they don't have access to the second time frame anyways, for example, right? But the midpoint is a great entry point. Again, it's just all based on probabilities. Sometimes it may tap into the open, and, you know, sometimes it may drop a little bit lower and just really rarely tag you in and move bullish. All right, so sometimes you may miss out on the trade. So it's a choice you got to make. Do you want to be tagged into the trade more often than not being tagged into the trade? However, you are going to obviously be, you know, see, especially in this example, sorry, big significance within the risk reward within that trade. So that's something to take note of as well. Now, I'm going to go based on some recent price action. Now, I'm going to just look here. So this here would obviously be your daily POI, right? As you can see, price tapped to the POI, but what I'm going to do is I'm going to drop to the 4-hour time frame. Now, something to note as well, when you see wicks like this, like, so if we just take a look at this, right, this here can act as a POI. So it's like a sort of sell to buy, right? So you see the higher the wick formed, you see a low wick form, and then a move up. Those can often act as POIs. And just to double confirm that, we'll just drop to the lower time frame anyways. So if you just look at the 4-hour time frame, you'll be able to see here, we can actually make a slight refinement because there is no imbalance below here anyways. So you can either take that as like that, and obviously, as you guys can see, it's happened to that, you know, perfectly. And that's there, and a great example of refinement. So, you know, when you want to come to refine your POIs, this gives you that some, you know, sort of you can just refine them pretty easily like that. So all you got to do is drop to the next available time frame, because, you know, back on the daily, this candle here, and again, it's within the wick, guys. Remember, wicks don't lie. And that there was a, you know, one big daily POI, but now we refine it to the 4 hour, and we can go ahead and, you know, drop to the 15-minute and do what we usually do, and yeah, go based off that. So that's pretty much just what you do, guys. And then you can repeat the process on the 15-minute. So if we had this POI here, usually I wouldn't really drop to the 1 minute anyways and refine this POI, because it's just not something I look to do. So I won't do that in this video, but you get the idea. That's essentially all you do. You just, you know, especially, it's more so if you have a big zone, if you have a big candle, then yes, I would refine it. But if it's a candle like this, I'm going to give you like a little line in a minute in which will put things into perspective as well, and it'll make sense. So this here, you don't need to refine any more than this. This here is a great example of a refinement. Why? Because there is nothing within here that's worth looking at, right? This here has a clear imbalance. There's the shift in momentum. If you look at what the order block video is and what invalidates POIs, you will see the key things that validates POIs. Nothing here validates anything within here except this one. So that is the clear as daylight. You don't need to go to the 15-minute and refine that anymore. There's something I just want to mention as well. The more you refine your POIs, the less probable it becomes of holding, because a lot of people, what they do is they make some mistakes, is they'll keep refining the POI, and you got to remember, right, we can only trade in probabilities, but sometimes if you push it that too much, just a little bit, you know, it becomes less probable. So don't over refine your POIs. Just refine it to you know, enough. Like, you don't need to, if you keep it around the daily and the 4 hour and the weekly POIs, you refine the weekly to the daily to the 4 hour, or the daily to the 4 hour, that'll be enough. There's a big difference between the 4 hour and the 15-minute. So you don't need to go any less than the 4 hour to refine a POI. If there is like a huge 4 hour, you know, candle, then what you can do is you can remark some 15-minute candles, you know, or 50-minute POIs within that 4 hour candle POI. But yeah, just don't over refine, because you'll get fixated on it. Because, for example, yes, we had a 4 hour POI here, we didn't have anything down here, so it's still a big zone. So you may be thinking, well, I'm going to drop to the 15-minute because I want there to be a candle around here. Therefore, if we drop lower, we may tap into that. I can look to take an entry off that. But the reality is, we don't know where price is going to go, like I said multiple times, and there is no point refining to down here, because that's another thing like I was going to mention. People get fixated on this. So for example, like I just mentioned, and if you were looking for something down here, you're going to get so fixated on price coming back down to here that you're going to miss this trade. So what I would recommend doing is just, you know, refine the POI that you see on the 4 hour, and that should be enough. You can go to the 15-minute, but just don't get so fixated on a certain POI. You know, make sure to react. I say that a lot on Instagram especially. And, you know, if we were to refine this 15-minute POI, you will see that it didn't even come to tap into it. But you may forget to react to price, because you're probably so fixated on price coming back deeper into this 15-minute POI. So just stay around those 3 high time frames if you use the same time frames as me. But just, you know, the moral of the story is just don't over refine. There's no need to. And keep it simple. Just trade what you see, sort of, and just react to the markets. Never predict what's, you know, don't try and predict the next move. You know, don't try and be the big fish in the markets. Just react. That's the moral of my post. When you see those, you know my the sharks on the post that I make on Instagram. If I've seen it, I'll probably put it in the description. But that's the moral of the story is. So yeah, that's pretty much it, guys. Any questions, you can send me a message over on Instagram or email, and we'll get back to you, or my support team will get back to you on email as well. And yeah, don't over refine. Remember what validates a, you know, clear POI. And you know, you can take those time frames and the pairs that I trade into consideration as well. But yeah, just don't over refine and keep it simple. And that's pretty much it, guys. And yeah, hopefully you learn something new.